Going on, everybody? So there is blood in the streets currently. We're going to be taking a look at the Nasdaq 100, which is the triple Qs. We are down 7.5 points, almost 2% on the day, currently trading at $384, $385. We did get as low as, I believe, 383 or 382. So with that being said here, pretty much nothing on my watch list that I like to trade is green. So if you did come in today thinking that, the dip was going to get bought yesterday, maybe we trade a little bit flat, maybe we have a little bit of a bounce after yesterday's selling, that did not happen. All we got was continuation to the downside. So we really have to take a look at the big picture, take a step back, take a breather, relax. Just because the market is open does not mean that we need to trade. If you are a day trader or a scalper, short-term swing trader, this is not the best environment for you. Now, is there little pockets where you could short specific stocks, specific indexes and make some money? Yes, but it's a very, very cash flow driven market, meaning that if you are going to put on these positions, you're not going to catch the whole move. You're looking for flushes through support into that next area of support. So with that being said, okay, let's take a look at what the triple Qs are doing here. We did get this gap down and we did get a little bit of a push into this 10-day moving average, which what I was thinking is that if we did open down flat or we gap down like we did today, I was thinking we trap shorts, off the open, go red to green and sort of close inside bar of yesterday's candle. That would kind of hold up this little flag pattern that we had here on the triple Qs, giving a little bit more context going into the Fed meeting tomorrow, which is going to take place on Wednesday, the 15th. So still, this area that we need to clear out here on the Qs is 400, 401 area. It's been giving us trouble going all the way back to the beginning of November. We only broke out once when we put in this all-time high of 408, a little bit of a blow off top, and then we know what happened. We came down here, tagged the 50-day moving average 1-2 times, kind of bounced up, and then we had that insane little rally, that 3% day on the Nasdaq, up 400, 500 points, whatever it was. And then we kind of traded sideways, consolidated, which was good. I thought, any kind of move like that, we do want to see a little bit of a breather, a little bit of consolidation, but I was hoping that this area was going to hold. So now that we lost this channel here and gap down, here we are yet again at the 50-day moving average. Now there's a lot of uncertainty in the market just due to the fact that this inflation, what is Jay Powell gonna do? Are we going to speed up the tapering process here? And how is the market going to react to it? So we pretty much already know what the big picture is. We know that inflation is high. We know that they're going to be raising interest rates. We know that they're going to be tapering a lot sooner, maybe doubling down on the tapering. We kind of know all this. So as traders, as investors, as scalpers, what we need to do is identify how the market reacts to the information, and we need to be on the right side of it. We need to be on the right side of the momentum. So if we're just sitting here thinking that, we pretty much, as a market, the Wall Street in general, even retail traders, we kind of know what's going on with the economy. We kind of know what's going on with this inflation. We know that there's going to be tapering. Jay Powell has already been, bracing us for that. We know that they were going to start tapering going into 2022. We know the interest rates are going to continue to climb. We know all of this information already. But if we just sit here and think that, because we know what's going to happen, that yes, the market's just going to continue higher, that's, it could and it couldn't. So what's going on right now is the market uncertainty. We still have to wait to see what Jay Powell's going to say. The way it sits right now, we are resting at that 50-day moving average. There's one of two things that are going to happen, and this is going to sound very generic. It's either we're going to go higher or we're going to flush down. But if you're a bull and you're a long-term investor, maybe you got some swing trades on, here's what we really need to be looking for. If the market reacts to this information that comes out tomorrow, and they don't like what they get, we could get an initial push down through today's lows. Okay, so as of right now, today's lows are going to be $383, around that 382 mark. We could get an initial flush to this bottom channel here at around 381. Okay, if we do lose this 380, 381 level, this is also going to correlate with testing this 378, 379 area that we tagged twice, kind of this little double bottom that we had here on these two wicks. If we do start to lose that, okay, if we switch over to the weekly time frame, okay, that's that 378, 379 area. If we do start to lose that, that is going to correlate with losing the 20 period moving average on the weekly time frame on the triple Qs. That is not good. That is not good whatsoever. As of right now, if you did not know what was going on in the news, you did not know anything about inflation, you did not know nothing about nothing, and you turned on your computer screen and you kind of look at this chart doesn't look too bad. We're above a lot of areas of demand. Okay. Bigger picture, if I just kind of zoom out here, we're in a beautiful uptrend here on the Nasdaq 100. Okay. Did we have a little bit of pullback here? Yes. Did we have a little bit of pullback here? Yes, yes, yes. But you can see every time we've gotten down into this 20 period moving average, we have bounced off of it. So we have yet to tag the 20 period moving average on the triple Qs since around September, and before that it was the 5th, like around May, and then March. So if we really take a look at it, if we do come off and there is a little bit of that initial selling pressure here and we do lose this 20 period moving average and actually close under this $378, here's what I'm going to be looking for. What I'm going to be looking for is, do we get follow through? If we get follow through that second day after, okay, that second or third day after we close below the 20 period moving average, I will be on here short and everything, because that changes the market structure. That can put us into a 15-20% correction on the big indexes, the SPY, the triple Qs, big tech stocks, even though a lot of tech stocks right now are sitting at their 50-day moving average. With that being said, they've got a lot of room to go. A lot of these stocks are up 50, 60, 70, 80% over the past year to 2 years. So there's definitely a lot of room to the downside if we want to go into some sort of corrective territory here, with the next area of support realistically being at around 350. So if we get a close below the 20 period moving average after the FOMC notes, what we're going to do is take our foot off of the gas. We're going to let the market digest the news, and then we're going to see what happens on Thursday and on Friday. If on Thursday we do get a second day confirmation closing below the 20 period moving average, that is going to, it's major red flags. It's going to basically say that the market is not comfortable with the rate that we are going to be doing this tapering process. They're not comfortable with the inflation. They're not going to be comfortable with the interest rates. We're still panicked about the new variant on the coronavirus. There's a lot of, systematic factors that are going to play into this closing below the 20 period moving average. Now, if we do get an initial knee-jerk reaction and come down here to this 378, 377, 380 area, kind of tag this, but then you see the bulls step in and immediately buy that up, and we are able to close back over the 20 period moving average, hell, even get over this 383, 385 area tomorrow and start closing below that. What we are going to do then is wait for another confirmation. Did we tag the bottom? Did we tag the 20 period moving average? Are we going to move up? And at that point in time, if we are comfortable, meaning the market is comfortable with what's going on here, then we could start looking at the stocks that are currently down at their 50-day moving averages and or reclaiming the 50-day moving averages. So if I just take a quick look at, say, something like Nvidia, we've seen here had highs of 346, kind of consolidated a little bit sideways. Then we started to roll over. Okay. Then we had a little bit of a dead cat bounce when the market gapped up, and then we completely rolled over for 1, 2, 3, 4, 5 days in a row now. So just about over a trading week. And you can see that Nvidia is sitting on this channel and also tag this 50-day moving average. So here's like how you would play Nvidia. Okay, if the market is going to start closing under the 20 period moving average on the weekly, meaning on the triple Qs, and we are going to go into this corrective state. There is no Santa Claus rally. He never made it. Okay, Santa's gone. He got lost up there. Rudolph did not lead him in the right direction. He's gone. Let's say that's going to happen. What we're going to be looking for here on Nvidia is a flush below 272, and realistically, any close on 272, under 272 on Nvidia, is going to start another leg down, potentially to $250. Now, I know this seems like a lot, basically $100 off of its highs, but guys, Nvidia has been on a fantastic run. If we just kind of look back here, going back even 3-4 months ago here, Nvidia was trading at around $227 all the way to lows of around $200. Then we started this monster rally here, a lot of volatility going on here, pressed it all the way up to 346, and now we're kind of rolling over. So So you can see here, if we were to come back into this $250 zone, this really isn't changing much at all. We are still on the uptrend. It's still looking strong, and Nvidia can come down into 250 and still continue to rally into 2020 back up to all-time highs at around $350. But if the market is okay with what comes out tomorrow in this FOMC meeting, let's let one day digest. Guys, like I said, there could be a knee-jerk reaction up or down tomorrow. So if we get a big selling pressure, a lot of flush and a lot of breakdowns, don't just take part in the short, because they could trap you coming into Thursday, trap those shorts, go long red to green, and then start to recover from there. If we get this big push higher, and then a lot of these stocks and indexes are underneath supply. So if we get this big push, this big green, this big green move tomorrow after the meeting, be careful with just getting long and saying that's it, the bottom is in, because they could immediately stuff you into supply. We are not in a good place for any type of swing trades. This is a cash flow market, and we need to be on our P's and Q's when it comes to shorting and when it comes to going long and it comes to scalping. With that being said, guys, everybody really needs to, take your finger off the panic button. Structurally, we're still okay. We do need to lose a 20 period moving average for the bear case. We do need to hold this weekly 20 period moving average on the triple Qs for the bull case. If we start to lose some of these levels, we have clear lines in the sand. Take a look at Nvidia, under 272, has a lot of room down. Take a look at a stock like Microsoft, okay, currently resting at the 50-day moving average. We have room down to 318 and then 309. There's a lot of room down. Take a look at the high-flying Apple. Apple, 2 days coming off of these highs of 182. Apple has room right now to around 170 and then 167, 165. Guys, there's a lot of room down on a lot of stocks. Tesla, for example, also broke down. Tesla does have a little bit of gap to fill here between $900 and $910, has room down to this 900, 897 area before we could see any sort of a bounce. If Tesla loses this $900 area, it is going to come down to around this 870. And guys, technical analysis, stocks are going to trade from demand to demand and supply to supply. So until Tesla gets back over this next area of supply, which is around 1,000, 1,015, we are not out of the woods. Selling pressure, the momentum is down on Tesla. And if I could bet right now, do I see Tesla getting to 1,000, or do I see Tesla breaking 900 first? I would say that it's going to break 900 first. Whether we break it and go all the way down to 850, 870, or we just break it and then kind of come back up. From right now, where we sit, we are in the middle of a huge range here. That range is 1015 all the way down to 900. We are at the bottom of this range, 935. Currently, I would say that we're coming down. If we take a look at something like Amazon, Amazon looks like it's been in its own bull market going back all the way till November here. If Amazon starts taking out, which it did actually, let's see if it confirms today. Amazon starts taking out this 3338, 3340. Amazon does have room down to around this 3300. If Amazon was to start losing 3300, it's going to have another leg down into the 3100s, guys. So if you want to be on the right side of the trade, you need to take a look at the technicals, see where is this support and where is this demand at. And if we lose areas of support, what is the next area of demand that we're coming down to? Right now, if I could put my money on it, I would say that Tesla or Amazon is going to for sure test this 3310 area before it starts to ramp higher. Now, if we're going to go higher on Amazon, it's going to need to get back over 3377. So you can kind of see where I'm going with this, guys. Right now, I'm not in a rush to put on any trades myself, even though there is some good setups to the downside. I just don't trust the follow through. And if I don't trust the follow through, I'm not going to put my money, I'm not going to put my money out there, because at the end of the day, we are trading with real capital over here. Where, this is not for fun. This is a business. This is how I make my living. This is how I survive. So if I am not comfortable putting on a trade here, I'm not just going to assume. I'm not going to assume because we're closing under this 50 period moving average that we're automatically coming down to, 380, 377, because the minute I go short on this thing, notes are not as bad tomorrow in the FOMC. They snap this back and we kind of refill this gap to the upside at around 391. Or if I think that we're going long all the way back to 391, they completely flush us below today's lows, and then we come down here and we start to tag this 379. So You got to let the market play out. You got to let it do its thing. But until next time, guys, do me a favor, join my Discord. That link is down in the description box below. Also, give me a thumbs up on this video, subscribe to my channel, and I will see everybody in the next video.